Would you consider yourself a beneficiary of this kind of high bond yield era?
Well, the increasing interest rates do aid most life insurance companies. While we're a term insurance company, it doesn't help us much as some of the others, but it's certainly a positive for us.
Talk to me about term insurance. One of the things the last couple of years, to my understanding, is that a lot of millennials, because of the pandemic, started realizing, hey, maybe they need life insurance. Have you guys noticed that as a driver of your trends?
We clearly saw during the pandemic the demand for life insurance increased, and you can imagine why. And that happened across all age groups that we saw. But I do think millennials are taking a particular interest as they age into the period of more responsibility for others in their lives. We do see them coming forward and needing financial guidance and protecting their families more than before.
How expensive is the product? Is it a headwind to people who want life or term insurance?
Well, we serve the middle income marketplace, Kelly, and they are living a difficult time right now. Many of your guests have talked today about frightening topics. And so middle income families hear about a bank crisis or a debt crisis, but they're living a cost of necessity crisis every single day. And so they're always prioritizing in their budgets, looking for the most valuable things to spend their limited money on. But we do find that they place a high priority on protecting their families, investing for the future, and getting out of debt. So we are seeing a good, strong demand.
And what about investment products? Is that something that for you guys is a big part of the business? And is it, how does it compete with, again, what we have with pretty high rates on something as safe as a treasury bill?
Yeah, there are headwinds, obviously, in the investment marketplace right now. We're a long-term systematic investing type of companies, the type of guidance that we give. So any time to start is a good time as long as you have a systematic plan to invest over a long period of time. So we do see the periods of headwinds and tailwinds, but we are seeing good net flows, as you mentioned, in our business right now. So we're seeing more people, coming to us to invest than we are redeeming for those financial challenges that they're experiencing. So there's good, strong demand there in spite of all the noise around us.
I'm curious about annuities, which are starting to get more interest lately. I believe you guys offer some of those products. I'm thinking more about kind of the fixed annuities someone might get, maybe pay out in conjunction with or after a 401k plan. I mean, there's a lot of uncertainty, like you talked about, in this idea of, hey, I know what my income stream is going to be is very attractive to people. I think they're making some moves maybe to start offering them in 401k plans or corporate plans. Do you think there's going to be more interest in annuities in the years to come?
Well, we do see a shift toward annuities during uncertain times because of the guarantees that are embedded in the product. And so that's what we're seeing today in this uncertainty. And I think that's probably consistent with the rest of the industry, even outside the middle market where we live and do business. So I do think there's going to be increasing demand. I do imagine it will ebb when there's more confidence in the future of the market, and some of these frightening dynamics that we're discussing today start to ease some. I think you'll probably see a mix shift back to less guaranteed products.
Right. And would you say that the bank crises we've experienced the last couple of months overall have been kind of a headwind, or is there any opportunity there for you guys?
Well, as I said, the middle income market knows about that. Middle income families, clearly it's frightening. And so there's an emotional impact, if nothing else. If they don't see it in their day-to-day finances yet or see it at all, they still have that emotional reaction. And we find most middle income families are looking for someone to help talk them through it and walk them through it to get to the right place. So it's clearly a headwind, but it may not be affecting every middle income family every day.
Right, because, obviously the CEO of Choice Hotels said he thinks that segment's still holding up. You think that population group is still going to be doing fine 6 or 9 months' time?
Well, they're a resilient bunch. As you know, we survey the middle market every quarter to make sure our finger's on the pulse of how they're feeling and their views of how deep a crisis is or how much opportunity is available. And I'm always amazed at how resilient and optimistic they are. But we are seeing reduced savings rates, increasing use of credit cards, less confidence in their ability to save for the future. And so over time, it's starting to put some real stress on middle income families and their budgets.
Interesting. Glenn, thanks for joining us with those details. We really appreciate it.
Great to be with you today.
Glenn Williams is the CEO of Primerica.